Hi, this is Zak Mir with a look at some key currency crosses for the 12th of March, end of the London session. And we're starting off with dollar yen, where obviously the Abenomics is having its effect slowly on the cross. Push for the dollar higher, yen weaker, obviously. And the big talking point, I suppose, in the recent past is the way that since the beginning of last month, we've seen support points coming in well above the key 100 yen level and also well above the 200-day moving average of 100.26 yen. Another point to note is just the way that over the past couple of sessions to start this week, we've seen the 200-day moving average actually tick to the upside, and that may be significant in terms of delivering the start of a new leg higher. We also have the RSI at 54, breaking the neutral 50 level and resistance in the oscillator window around neutral 50 over the course of February. So this looks like a market which is all geared up to a new leg on the upside. The simple pattern here in terms of the price channel is that we've got one in place since the end of July last year. Floor of the channel just under 102 yen, so that's a stop loss, say 101.90, something like that. And the resistance line projection from last year as high as 108. So at the moment, you're risking around a yen to make another 5 yen on the basis of this price channel. So on that sort of perspective, this looks like an attractive trade and one that's set up just over the last couple of days in this mini bull flag that we have. Moving on to cable, sterling dollar, obviously here an uptrend in place, a recovery in place since last July, since the middle of last summer. The key over the recent months is the way that we've seen support coming in at or just below the blue 50-day moving average, currently $1.6537. That's also the floor of a rising August price channel. So you've got double support there, and that means that really from current levels, which is around 166.16, you're risking around a cent in terms of the stop loss on the bull argument. This, the price action over the last 2-3 weeks can really be described as an extended bull flag, holding at or just below the former January resistance. That was around the $1.66 level, and we're holding just around that currently. So really, while there might be a little bear trap or a test of the 50-day line, it looks as though 165 even would probably be about the lowest this market would go. Another point to note also is the way that the RSI is just around the neutral 50 level, just fractionally below at the moment. But you would expect the uptrend to start to kick in there and to bring the RSI back up into the positive momentum area. 170 plus is the target while this cross holds $1.65. And really any weakness now towards that 50-day line can be regarded as a buying opportunity. I suppose intuitively you would still think that there needs to be something special here to get this market through $1.70. And I suppose cynical traders might want to wait for a bit more strength or a show of strength here. Break of the 10-day moving average at $1.6679 could be a decent buy trigger here. On to my favorite cross, euro dollar. As I say quite frequently now, it seems that over the past couple of years, the only two people who've been bullish of this particular cross and this currency, the single currency, have been me and Mr. Draghi, the ECB president. He called the market correctly around the $1.21 level. Told traders not to be short, and I think ever since they've been short and getting kicked and punched by this cross. The latest situation here is an interesting development. We've got the initial March surge through towards $1.39 holding. Mini bull flag here, rather in the same way, the same type of formation we've seen on dollar yen. And on that basis, one would be looking for a new leg to the upside to kick in quite soon. $1.40, the obvious target, psychological level. A lot of stops are going to be around there. A lot of people trying to sell, go short yet again of this market. A bit of fun, I suppose, in terms of the top of the price channel I've drawn from August with a target at $1.44. By definition, all the targets that I've suggested over the last year or two have all actually been hit. So maybe this one will be no exception. RSI uptrend line there as well. We're not overbought on the RSI criteria. 66 is still off the overbought level. Any weakness towards the 10-day moving average, $1.3808, currently regarded as a buying opportunity. Although I have to say that I don't even think this market's going to go much below $1.3850, given that we've already done much of the consolidation, much of the dirty work around the $1.38 level since December. So 138 really below that, you would actually say that this is a bull trap and we should ignore it. But I'm not expecting that to happen. So $1.40 reasonably quickly over the next few sessions, and then maybe the 1 to 2 months target here, $1.44. That's it for me. See you again next time.